We detected unusual trades worth about $3.5 million on BigBear.ai stock, ticker symbol BBAI. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying BigBear.ai or bearish and selling. Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. And so to level the playing field, let's dive into the data analysis of this wealthy investor's trade. As we can see here on the options time and sales tape, these January 16th, 2026 options at the 12 strike calls were being traded multiple times at around $9.48 and $9.46 for a price of about $350 each. And so let's dive deeper into the option chain to find out how many contracts were being traded in total. As we can see here, for the January 16, 2026 options at the 12 strike calls, we have a total volume of 10,000 contracts being traded. And so we can calculate the estimated trade cost of 10,000 contracts multiplied by the $350 each, the price it was being traded for at the time, and we get a total of $3.5 million. But keep in mind, this is a higher risk trade in comparison to the trades that we share on our website. And so if you want to get access to the lower risk and higher probability of profit trades, then go to our website. We'll put a link to our website at the top here, where you can get access to better trade ideas that the wealthy investors and potential insiders are trading, because not all of these unusual trades will be profitable. Some of them will be a loss, but as long as we diversify our portfolio with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. Now, even though this is higher risk, we still traded this, but we use position sizing to manage our risk. As you can see here, we are in the same position. POS stands for position and green means buy. Notice that these options have an open interest of 3,500 contracts, which is less than the 10,000 contracts being traded. So we know that most of these trades are new, opening trades, and not closing trades. This data is very important to analyze because we do not want to follow closing trades. If a wealthy investor is closing their trade, basically getting out of this stock, then we would not be interested in opening a new trade. So always make sure of this, because this is one of the common problems we see other websites and scanners make when they report unusual option activity. They do not filter closing trades out and simply report every unusual trade, leading to inaccurate results and more losses. Now, with that said, because this unusual trade was a new opening trade, we also bought these call options, but we got a better price at $285 each because the stock went down lower after those unusual trades were made. And so when we analyze this trade, you can see here on the risk profile profit loss graph, where the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple and blue lines are trading below it, this trade becomes a negative loss. And if it trades above it, this trade becomes more positive, profitable, because this is a long bullish trade. And we can confirm it here on the Greeks. We have a positive delta trade. If it was a short bearish trade, it would be a negative delta. But be aware of the risk of this trade. We have a negative theta decay. And so as time goes on, this trade will lose in value. And that is why you can see the purple line, which represents the current date, drops down lower to the blue line, which represents the option's expiration date. Since these options lose value through time, the break even on this trade moves higher as we approach the expiration date. And so you can see here, even though these call options have a strike price of 12, the stock needs to trade above $14.86 per share for this trade to be profitable at expiration. And because of this risk, we only took a small position in this trade. We don't put a lot of capital into these higher risk trades because we put most of our capital into the lower risk, higher probability of profit trades that we share on our website. We'll put a link here where you can also learn about trading strategies to reduce risks while increasing profits. Let us know in the comments below. Do you think BigBear.ai stock is a good buy now, or do you think it will crash down? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.